Hi there. This is another episode of Treasure Valley QuickTips. What it is I am the franchise owner of Network in Action out of Houston, Texas. I was number 27 4 years ago. Now we have 127 more and one internationally. So it's kind of cool. Out of that, I get through the members and then outside too, I just get to meet some super high quality experts in their field here in the Valley. And I just try to bring them on the show to share their expertise. And no topic timelier than mortgage and interest rates and all that. So I brought on one of the local experts here and that I know and is a friend. Devin, introduce yourself.
Everybody, Devin Fahrner with Finance of America Mortgage. I'm a local producer of loans here, and I also manage Idaho and the Pacific Northwest for our company, which is a nationwide company, but we like to say it's still got a small hometown feel to it.
Yeah, love that. Yeah, so I was telling you right before we got on, what timely. I mean, I listen to the radio when I'm in the shower in the morning, and they talked about, are the Fed's going to raise the interest rates, a point or a half a point, or what's it going to do? And then, so I mean, no timelier. So and again, you've been doing this. How many years you been doing this?
I just hit 27. It's pretty much the only thing I've ever done since
I started when you're 5 years old.
Yep, exactly.
That's awesome. So I mean, you've been through all the ups and downs, and now we're through another interesting, crazy, what are you going to call it, time. So what's your take right now on the interest rates? I mean,
yeah, and we're going to talk about a couple things today. And one of the things I wanted to point out is, a lot of people remember 2007 through 2010.
Yep.
But I also went through 1998 and 99, which if you weren't in the mortgage or real estate business, some people don't remember that was another little bump in the road. So to anybody listening to this, because you and I kind of talked about this, Scott, I am really going to do my best to give unbiased answers.
Love that.
And so I'll give you my take on interest rates in the market and, all those good things, but it's not just from a guy that's like, hey, let's buy a house.
Yeah.
There's a lot of people out there, obviously, that have just said they think that Newton's law of gravity must apply to economics, interest rates, et cetera, meaning rates have been really low, so they must have to go up. And property values have been really high, and so they must need to fall, right? And we're seeing that, and immediately people are bringing up 2007, 2008, 2009. It's really sad to see that because the variables that are present today are nowhere near what they were back then. And so that being said, I'll stick with the interest rate question first, but okay. Yes, interest rates are on the rise. We've seen record high inflation. We do believe we are really close to the peak of this hill, if you will. Last week, the CPI, which is a consumer price index, came out, and it was really close to leveling it off. It only went up one tick, like 1/10. And the belief is that when that kind of levels out, then the investment community will start to feel that inflation is under control. And once inflation is under control, you'll see interest rates calm back down because inflation obviously is the enemy. If you buy an asset that's only producing 3 or 4% and you have 8% inflation, you're still losing 4%. Yeah. So contrary to what the local media, I hate to get into this, but the three main networks are full of disinformation when it concerns finances. I would never advise anyone to get any financial information from those places because their stories are designed to catch headlines, right? In 2020, they said it was not a good year to buy a home. Things like that. So when the Fed makes this next interest rate raise, which is not mortgage interest rates, it is the rate that they lend money to banks and other institutions. So it affects credit cards and car loans. And yes, it sometimes does have an effect. And people would say, well, Devin, how could you say it doesn't have an effect? There've been these raises and your interest rates went from 3 to 6. We actually believe the next time they do the probably a 0.75% raise, you may likely see interest rates drop, which seems counterintuitive, but they're going to feel like that next raise will hopefully kind of get a handle on inflation. And if they believe that, because now they're getting a greater rate of return on their money, right? Because they're charging more for it. Right. It's a little bit more of an inflation fighter. That gets us over the hump. And then we actually think somewhere between Q4 and the first 2 quarters of 2023, we should see interest rates come back down. Now, down to what? I don't know. I'm not an expert, probably not 2.99. But we would like to think that it would start with a 4 instead of a 6.
Right. So, and then that leads right into the next thing is and we're talking here in the Treasure Valley, Idaho.
Yeah.
And we've had years of just record growth, and we're still. I mean, everywhere I look, there's still homes being built and apartment complexes being built and commercial things being built. Have it slowed down? Yes, it has. Right,
Yep.
but I still can't believe. I'm a third generation Idahoan, so the question would be: is it a good time to buy a house right now?
Yeah.
If you're
And
looking to
we
buy a
talked
house?
about this before we even started filming.
Yep.
I'm not going to get on and say for everybody out there, it's a great time to buy, right? I was in the military. Sometimes people in the military get bumped every 2 years to different duty stations. Sometimes you just got to rent, right?
Yep.
Sometimes you just simply can't buy a home. But my message would be, even if you can't, talk to somebody like me and get in a plan to where you can get on track to buy a home and do the daily disciplines. I equate all of this just like to designing a workout plan, going on a diet, trying to
Yep.
stop some kind of a habit. If you are a 2022 consumer spender, you are not getting conditioned by society to be a homeowner. They're telling you to have everything that's nice, and that even if your income's here and everybody else's income's here, you should have the same things that they have. And that kind of behavior won't condition you to being able to buy a home. But the facts are, especially in Idaho, ever since the last recession, it's been a good thing to own a home. And there's a couple funny analogies that I like to use. First, rent is 100% interest. So whether the interest rate is 3% or 6%, you're still making a principal reduction on your payment every month. The next thing is, most of the loans we do are fixed. What have rents done in the last 10 years? What have they done in the last 5 years?
Yeah.
What have they done in the last 3 years? So if your argument
in the Boise area, do you have an estimate? I mean, what's it here in the Boise? I mean,
I didn't pull stats for this call, but I will
Fine.
tell you they do two things. First, they chase property values, right?
Okay.
And they do somewhat chase interest rates a little bit, in the respect that as people buy new investment properties or acquire a little bit more rate of return, they're going to attempt to get higher rents. Now, the market for rentals, I mean, there's people are still having a hard time finding places to rent. So they're still going to pay these prices, right? So the person that pre-quals with me and says, Devin, I say, congratulations, you can buy a home and your payment's $2,400. And they say, that's preposterous. My rent right now is only $1,900. Well, in 5 years, their rent's likely going to be $2,400, and their mortgage payment, aside from property taxes moving up, would still be the same. And it's the whole story of society when it comes to finance and having an eye for the long game. These are the types of things we say, it might be a pain point to get you in right now. Yes, interest rates are a little higher. Another analogy, I just saw a stat yesterday that we have slowed down greatly in our growth. We all know that. We've seen more houses come on the market, et cetera.
Right.
But we're still up 6% from this time last year. So that's on a $500,000 home, that's $30,000 in equity from last year.
Yeah.
So if you bought a home right now with interest rates being 3% higher, you likely might have to pay about $500 more a month. That's just an estimate, but that's $6,000 a year. Do you know how many people have told me they're not buying a home right now because they don't want to pay $500 more a month on a payment, but they fail to see the long game? We call that the cost of waiting of the interest rate. And we just don't believe that in Idaho, with the amount of people that still desire to move here, the amount of you see the big businesses coming in everywhere. I don't need to tell you about that.
It's like monthly, there's an announcement of either a hint or now finally another big company's moving here. I mean, I grew up here and I've never seen more big businesses move in here. We had some big businesses here and some have moved out, right? But now that was years ago. But now we have the Amazons and Facebooks, Meta are moving here. I mean, growth. And with big business coming here, what follows that, right? Employees they're going to need homes.
And what's funny about that one too is that I love it when, if you were kind of the amateur financial analyst, jumps in and says, but a whole bunch of those jobs don't pay enough to afford a home. Right. Okay, fair enough. So what are those people going to do? They're going to rent. Yep. And they're likely going to rent from somebody that purchases a home and rents it out. Now we are seeing some more multifamily come in, but the multifamily still can't keep up with the influx of people. So those people, two people will go in and make someone else's house payment, which is another one of my favorite sayings. Even if you're renting, you're still making a mortgage payment. You're just not making your mortgage payment, right?
That's true. You're making it for somebody else.
Yes. So, I mean, we have seen consumers start to be a bit more open-minded. Hey, I'll buy a house, but I'll get a roommate. That didn't sound
Right.
super appealing, but guess what? They had a roommate anyway when they rented, right?
Yeah.
Or if they didn't then to rent what they want to rent now,
Yeah.
they're going to have to do that. We've seen people buy and
Yep.
rent out a room, Airbnb, short-term
Yep.
vacation rental. Again, kind of a weird deal, but it's pivoting with what's going on out there in housing.
Yeah. And getting into that is the term that I hadn't heard of until talk to some younger people. There's a house hacking,
Yep.
and
Yep.
it was like what people used to and still do, but and I over the years, hey, I'm going to buy this fourplex and I'm going to live in one of them and then rent out the rest, and they're going to buy it for me.
Yep.
Well, now you got to have a parent or somebody to be able to get you, but you have some young kid that does have a family members that can afford to get them into a home, right? They get in a home and they have 3 bedrooms. Additional, it's a 4-bedroom. They got 3 and rent it out.
Right.
I mean, I just hadn't heard of that until I talked to some younger people. They go, "Oh, that's called house hacking." I'm like, "Oh,
Right.
wow!" So it's just another creative way to get into a house.
Yeah, I've even seen people take that to extremes where they very carefully research the rental agreement, and the landlord made a mistake to not put in the lease that they couldn't sublease it. And then we've even seen people lease an apartment and then sublease it out for a short-term rental and make money off the arbitrage, I believe is what you would say.
Yeah.
And I mean, I'm not advising that, but yeah, they've taken it to way different levels with that kind of stuff.
And if you can get through, if it's kosher or in the covenants and all that stuff, why not do it if you can do it? I want to go back to the very beginning what you said, because I hadn't thought about it. I think this is something that a lot of people need. I mean, it's a big point is when you said even if you're not going to buy a home right now, but you're thinking of buying it in the next several years, right? Why wouldn't you start getting yourself in order? And I'm like, that's kind of like the duh moment, but really that is so powerful because rather than sit here and whine, you and your wife whine that you're in an apartment, you're never going to be able to afford these homes and stuff. Say, okay, what do we have to set ourselves up to buy a home? It might be 5 years from now, but what do we have to do? Well, first of all, you got to get your credit up.
Right. Right.
And you gotta, what else would they have to do? I mean, what else? Name a couple of top things to get yourself in order to buy. Let's say someone, their plan is to buy a home in 5 years because they think the interest rates are going to drop a little bit and they're going to have the money to do it.
Yeah. So there's really, I'd say 4 main things, right? I mean, we call it credit capacity, collateral, and character. And I'll kind of talk about that as well. But first, the credit, that's the easy one. It doesn't matter if you've got money. It doesn't matter if you can afford it. If you don't have good credit, you're going to struggle. Credit is actually, I'm going to phrase this carefully, for me, remarkably easy to deal with, even if people have had a checkered past, because as time goes by, so there's credit repair agencies out there that try to get things removed from credit. That's a little bit dicey. We won't go into that today, but they basically bombard these people with letters. And in a lot of cases, they're not successful in permanently removing this stuff. So just like I don't recommend a quick pill for weight loss or a quick pill to, gain muscle mass, it's kind of the same thing there. But from somebody like us that's an expert, you can go, okay, yeah, you've got some bad stuff there. And it's not going to go away overnight. But if you do these things, maybe open a new credit card and keep a real nominal small balance on it that you're using it every month and paying it off. And doing things like that, a lot of times it's like a bad reputation. Somebody had a bad reputation in high school, and then over time they become a good person. People eventually forget about that. Credit's the same way. The negative stuff in the past, if there has been, will become more and more and more dated. It'll eventually fall off, but that takes a long time. But a lot of people stop there and they just say, well, I'm just going to sit and wait. Well, the second part is you got to have some good stuff. You got to do good things to build that positive reputation. So those things begin to outweigh the bad. So usually within a period of 6 to 12 months, even somebody with some pretty negative credit, we can get up into at least the low 600s. So they're eligible for some type of financing. We have amazing financing options here, like Idaho Housing and Finance is a local nonprofit. You get somebody above a 620 credit score, you can get people in some cases with as little as 0.5% of their own money.
My first house ever, I'm pretty sure Idaho Housing Association. Is that what you said it was?
Yep.
IHA. Yeah.
Idaho Housing and Finance. Yeah.
Yeah. That was years and years ago. My first house. That's what I went through.
Yeah.
And I don't know if we were allowed to or not, but I almost think the down payment my grandma gave me.
Well, and that was the second thing I was going to say.
It's like 3% or something. It was low.
Yeah. And my other favorite thing is sometimes people will come to us and maybe they don't qualify for that program. And we'll say, hey, can you get a gift? And they're like, oh no, I've, made all these mistakes in my life, and my parents and my grandparents don't have any faith in me and all that. And one of the things that's amazing, if suddenly this person goes to those people, and I'm not saying every time, everybody's different, but I've seen some miraculous things where they're like, I couldn't believe it. I told my parents I was going to kind of get my crap together and buy a house, and they said they would help me out. Because it's a totally different thing than, hey, will you loan me money to buy the electric guitar or the gun or the hot rod, right? It's like suddenly this person's making this mature decision, and suddenly they find they potentially find support that they didn't know that they had. So the number one, I guess we got off the track there. Number one is credit. You got to get that looked at. You're not going to fix it overnight. So give a good mortgage advisor a year. If you think it's going to take a year, give them that year to give you the tips, these small daily disciplines. So that way, they can get you in, financial shape from a credit standpoint to be able to buy a home. The second thing is in doing what we would do a full loan application. Just to be clear, we would collect the information, we would pull credit, we can advise you on credit. Now we're going to look at, okay, if we get you from here to here on the credit piece, what program will you likely be in? And therefore, what kind of a down payment would you potentially need? And we can say, hey, Scott, I need you to start saving $200 a month. That means you'll have $2,400 in a year. That's a 0.5% on a $480,000 house. Some quick math there. That's where we need to be at, right? Or maybe it's going to be even more challenging because their credit's really bad. And we say, hey, you're going to need that plus a couple months of reserves in the bank. And so here's what we need you to start putting away every single month for that. And then the main thing is looking at the income and figuring out what they can or likely will be able to afford. And maybe weave into that, okay, you can afford this right now, but if you didn't have that big car payment, you could then afford this. And again, then you can start doing some debt planning, right? A crazy statistic. Now rates are up a little, but when they were a little bit lower, we used to really easily be able to save $50 a month per 10,000 financed. So as you know, it's very common right now for somebody to go out and drop $400 to $500 on a car payment, right? They don't even think twice about it. A $500 car payment can have as much impact as $100,000 in mortgage financing. So people go out and just, go, oh, I got, and so you got to think of the guys that go buy the fancy truck, right? I mean, $1,000 a month payment, you just took away $200,000 that you could qualify on a mortgage to have that vehicle. So then we, have to kind of chuckle and say, nice truck. Too bad you can't own a garage to put it in.
That's a great way to put it. And I just said, I love that. Real quick, I just had a friend that his spouse just bought a car, and I said, well, what's the payment? He goes, about $700 a month.
Yep.
Now they're older and they're more established and stuff, but still, I was just going, what? Because again, I'm one of those people that actually buy cars with cash, but I have good credit.
And we could get into that too, because you shouldn't be buying it with cash unless your investor is not making you at least that interest rate on the other side, right?
That's true. Yeah.
And that's the difference between a Warren Buffett and a Dave Ramsey. We've talked about Dave Ramsey a little bit. I don't love everything. He kind of gives that blue collar financial advice, but sometimes it does pay off to leverage other people's money.
Yeah. It does. That's the same thing about a house. Like, I've heard financial people that I respect talk, and they don't talk about Dave Ramsey, just about people that say, pay your house off, right?
Right.
And they say, well, look at your tax situation, and an accountant will say, that doesn't make any sense at all with the tax. And I'm not a tax person, but they discuss about, what you can write off and all this. In a lot of cases, it doesn't make sense. If you're investing over here and you have, you're paying off, you can write off part of your home, your home expenses and stuff. It doesn't always make sense to pay off your house. In most cases, it doesn't anymore.
But again, I don't like to offend I kind of call the fair weather financial planners of the world. So, I mean, an easy scenario for you, if you bought a house in the last couple of years, you got 3%, right? Also, in the last few years, if you had money with any kind of a portfolio manager, they likely made you triple to quadruple that on your money. So why in the world would you take money out? I actually have a car loan right now. I have a car loan at 2.99. I could have written a check for the car. Why did I not? Because I was making 12% on my return. Why would I take that money out at 12% to avoid paying 3%? I'm still netting 9, which means with inflation, I'm netting 1, but I'm still not losing money. So that's kind of 400 level, but those are those are kind of where, when you get to that next level of maturity with finance, then you can kind of dig deep in it. It doesn't always have to be that, just don't have any debt type of concept. That's kind of stage one.
Yeah. Well, this has been great. Just, great overview. And I really, again, I like this because and I've known you for years, and I like you because you've been doing it for a long time. You've been through all these before. So it's like when you hear all these naysayers about this or that, you're like, I've been there before.
Yeah.
That isn't always true, and then I also like that you've helped, like, I know personally that you've helped people for over a year to get themselves established so they can get a loan. And
Yeah.
I like that because rather than all these people that are all the everything's fallen, everything's bad news, right? We'll never be able to buy a house. Well, you never will be able to buy a house if you have that attitude. You don't do anything about it. But if you get someone like you that can help them plan for the future, you probably can buy a house, just not tomorrow. It might be next year or 2 years, but at least you're going to be set up. And you blink and a year goes by. I mean, I can't. I mean, so a lot of times people talk about a year, 2 years, whatever. No, you blink and you'll be a year from now, and you'll be set up in the right place, and you'll be loving yourself because you're in the perfect place to be able to buy a house.
Yeah, a company I used to work at, instead of calling themselves loan officers, they used to call us mortgage planners. Okay. And with all due respect to several people I know that I've helped in the past, that were people that were engineers and people with probably way higher IQs than me, I think the biggest mistake they make is considering a mortgage a commodity. Like, I'm just going to shop for the guy that has the cheapest rate.
Yep.
And I'm not arguing there aren't people out there with 20% down with 800 scores that can do that. But just taking the time to get with a planner, it's just like any big topic out there, whether, in the last couple of years it's been COVID. If you slice and dice variables and you don't look at the full spectrum, just like we talked about, like on the prequel with here's your rent payment today versus here's your housing payment today. If that's all you look at, if you don't sit down with somebody and say, hey, I'd like to buy a house in the next year or two, what could we do? Or I've got this really firm opinion that I should or shouldn't do this or that. What do you think? There are a lot of really intelligent people out here that have just missed. They've stepped right over that dollar to pick up that dime, and they think that they have got it figured out, and they think that they've made all the right decisions. And sometimes I just sit back and go, hey, that's a really good point of view, but did you consider X, Y, and Z as well? And you just see the light bulb go on, and they're thinking like, wow, for the past 2 years, I've thought specifically this way, right? Like right now, people are probably, here's a quick example, we'll wrap this up. There are people right now thinking interest rates are in the sixes. By the way, what is today's date? The 16th?
Yep.
September 16th. We should say that interest rates are in the sixes. Don't fall out of your chair. So maybe I shouldn't buy. Okay. Well, we just talked about the fact that as we get control on inflation, we see interest rates start to come back down. There are many people right now that are kicking themselves that they didn't buy. And guess what's going to happen immediately when interest rates start to come back down? A bunch more people are going to come into the market, and demand will increase again. This is not my opinion. This is scientific data that repeats itself over and over and over again. Yeah. When that happens, immediately prices will push back up. So when is a good time to buy a home? A good time to buy a home is when there is a need and you can comfortably afford it with some daily disciplines. It's not about trying to time the market, because if you get 5% a year from now, but you pay 5% more for the house, so you saved a percentage on interest rate, you will lose money than getting a home now and then later on taking advantage of a refinance opportunity, which you can likely pay for with the equity that you gained by owning the home while you weren't waiting to buy the home.
Yeah. I wouldn't even want to say, but I just know that my house is worth a lot more money than I bought it. And I actually bought mine. I won't go too much into this because we're going to wrap this up, but I bought mine. I got lucky because I bought it for a for sale by owner, and he was not a nice guy, and that's the only reason that I didn't. Because every other house I looked at was just like now getting bought, under cash offers. And so I went back to a place with a guy that was just a jerk, but nobody else would deal with him, and I did, and so I got a pretty okay deal on the house and stuff, and so now, my house is appreciated, and I bought it in the worst possible time, everybody said, and it's worth, it's 2.5 times more than I bought it for.
Right. at the worst possible time.
At the worst possible
Says-
time to buy. Yeah,
says who,
everything collapsed. Yeah, it was like it was collapse. I mean, I bought it, and then right after I bought it, everything collapsed, and then everybody, So anyway, but that's another good. I guess I'm a living example of I bought stuff right the last crash, and I got it. It wasn't as high because I got a pretty good deal on it, but still it was higher than everybody else said it would be. But now it's like in about 2.5 times worth than I bought it 12 years ago. So that's not a bad return.
Not a bad return. You probably could not have saved excess income in a savings account and had that kind of return on that money right now.
Never. Hey, this has been great, Devin. I appreciate you. And I know people are out there, listeners are going to learn a lot from this. So, and I love to bring you back because I like to talk about investment properties. That's something that I've always been interested in. So I'd love to give you a take on that. So
we've got some good feedback on that as well. Same kind of a concept. Don't just look at what the cap is today. We got to look 3, 4, 5 years down the road.
Yeah. I want to bring you back on that because that's something that I know I talked to a lot of people, and they're people that I met that were never interested before now are talking about real estate and how they can buy it. And so we'll bring you back on. Hey, I'll have your information in the show notes, but what's the easiest way to get a hold of you if someone wants to get a hold of you?
I don't do the business and personal cell phone. I have one number. I've had it for 20 years. It's 208-863-6610, 863-6610. Call me 24/7. If I miss you, I'll call you back.
Awesome. Hey, I appreciate you, Devin.
Yeah.
Appreciate everything
have
you
a
do.
good day.
Have a great day.
Bye-bye.